currently at $63.02. Yahoo analysts estimate they can move up to $96.80 in the next 12 months. If they do, that'll be a 53.60% increase. Hey guys, we're covering February 18th through February 21st of 2025. This week's winning stocks. And for those of you who are familiar with the channel, you know I like to start off with the SPY, the S&P 500, the Dow, and the Nasdaq, because those three pretty much describe what's been happening with the entire market. And starting with the S&P 500, we see that it had hit a peak a little back, but we see a couple of green candles here, each candle representing a week. It moved back a few weeks. It continued. It was down. It moved up a little, but it's sort of moving sideways now. This last week was a down week, on the SPY. Now, the last week on the Dow was a down week as well. But this candle was a little long, not very long, but a little long. So the Dow has not been climbing as well. And lastly, we have the Nasdaq, which is sort of coming off of what looks like a little bit of a high, but last week was a down week. So we'll see if that continues to go sideways or starts to move down. So now we're going to jump and look at the stocks on our watch list. But before doing that, I want us to go and take a look at the app, which brings all of these stocks to us. And also, I'm going to show you a little something extra this week, because we know that when we look at stocks in this series, we're looking at stocks that we are expecting to be bullish. We're expecting to move up. But what if the market takes a downturn? Is there something that can protect us in that case? Is there something that can make us actually benefit when the market is moving down? And I'm going to present that to you today. So, first we're going to talk about StockSage. StockSage is the app that presents all of the fundamentally sound stocks that are at their annual low price that we can look to getting to move up. Now, these are stocks that we're looking at increasing in value. We're looking at making money as they move up. And we could see this list of stocks which have actually fallen to their low price. By default, the stock looks for companies that are actually making money every year, because you'll find a lot of companies on the stock market are actually losing money every year. They're not making money every year. So in this app, it looks through the entire 52-week law of the stock market, stocks that have hit their lowest price in the last 52 weeks, and it pulls up the ones that have made money all of the 5 years, or at least 3 of the 5. Like, for example, if we come down to this one, Peabody, they lost money in 2020. But 2021 through 2024 were all positive years. But there's a few things that we look for with these stocks. We want them making money, yes. It's preferable if the money that they're making is increasing every year. But the stocks that are in this list, they have positive earnings at least 3 of the 5 years. So they're making money from year to year. and they have total assets above total liabilities on their balance sheet. So they have a decent balance sheet. Now we can narrow it down and find even more fundamentally sound companies. Companies that buy back shares of their own stocks every year, which we love. And notice the list is smaller now, still long but smaller. Then we said the list automatically has companies with total liabilities exceeding total assets, exceeding total liabilities. We can click this and choose companies with current assets exceeding current liabilities. And notice now the list is even a little smaller, still a bit lengthy. But let's see what happens when we say we want a company that had profit margins above 10% for the last 5 years. And that list is actually gone because there's no companies in this list with profit margins exceeding 10% for the last 5 years. I'm going to turn off these other filters and see if any others come up. So if we turn off the filter for stock buybacks, we find that there are 3 companies that have profit margin that has profit margin exceeding 10%. Now, if I look at this company, it's a little interesting because, like I said, we prefer a company where the earnings per share are increasing every year. Well, this one isn't exactly increasing every year. It dropped one year, but only slightly. $1.29 in 2020, $1.24 in 2021, $1.53 in 2022, $1.80 in 2023, and $2.07 in 2024. And if I want to see what the earnings per share is currently, that's the estimated earnings per share because it's not the end of the year yet. It's $2.03 for this year. That's the estimated. So all of the stocks that we have on this list today are going to be through the StockSage app. One other thing the StockSage app does, we're going to see if there's any. It can show you stocks in this list with a dividend yield of greater than 4%, of which there are 5 today, greater than 10%, of which there are 2, or even greater than 20%, of which there is 1, Claros Mortgage Trust. Not going to go into the fundamentals on that right now, but all of these things are found within the StockSage app. But as I said, that's for those who are buying bullish. You're buying a stock at its annual low price with the expectation of it moving up. What if you're expecting the market to drop? Well, actually, we've come out with a new app. That app is called Putmaster. Now, what is a put? A put is actually an option. But a put is an option that you buy, not when you expect a stock to go up in price, but when you expect a stock to go down in price. So if that stock drops, that put makes more money The further it drops, the more money the put makes. So, what does this Putmaster app do? It does the exact opposite of StockSage. StockSage looked for fundamentally sound stocks at their annual low price. Putmaster looks for fundamentally unsound stocks at their annual high price. Because if they're at their annual high price, what can they be doing? They can be dropping soon. And we want the ones that are fundamentally unsound or unhealthy companies. So, we're looking for companies that have negative earnings per share for multiple years, such as this company, Great Ajax Corp, lost money in 2020, 2022, 2023, and 2024. What about Applied Digital? Lost money in 2020, 21, 22, 23, and 24. So now we're finding companies that are not fundamentally sound, but they're at their high price and starting to drop. And by clicking on these filters, we can find things that makes them even more fundamentally unsound. Like on the balance sheet, they have more debt than they have assets. And actually, when I turn on both of these filters, see, none of the stocks meet both of these criteria. But if I just turn on liabilities greater than assets, we have a few. But I'm going to keep it on 3 or more years of negative earnings. And this last one is for companies that are constantly selling more shares of their stock. You know, a company can use shares of its stock like an ATM machine. Whenever they need more money, they just sell more shares of their stock. That's what we as investors don't like. We like when they buy back shares of their stock. We don't like when they sell more shares. So this app does the exact opposite of StockSage. And when you find these companies, you can look at them on the candlestick chart and see when they're starting to move down. And that's when you can buy or put on them to make money. So there's opportunities in the stock market to make money when the markets are going up or when they're going down. But having said that, let's jump over and take a look at the stocks on our watch list. And our first stock is W&T Offshore. They have an earnings report dropping on March 3rd, and they have a dividend yield. They pay a dividend yield of 2.26%. Now, the earnings report is sort of like the report card you'd get in school when you was a kid. It would say how you did over the previous semester. Well, the earnings report describes how a business did over the last quarter, which is 3 months, a 3-month period. In any event, this stock is at $1.77 a share. Yahoo analysts estimate that it can go up to $10 in the next 12 months. That will be a 464% 0.97% increase. And now, what is WNT offshore? WNT offshore is good old American oil. So, currently at $1.77, Yahoo analysts estimate it can go up to $10. Next, we have Urban One. Urban One owns radio stations. And this stock is currently at $1.44 a share. It's been there for a little while now, a few months. We have LKQ Corporation. They have an earnings report dropping on April 21st. This stock has a 2.96% dividend. They moved up, down, back up. Notice this was a long candle, but it came down more than halfway by the end of the week. They're currently at $40.49. Yahoo analysts estimate they can move up to $51.14 in the next 12 months. If they do, that'll be a 26.30% increase. We have Anheuser-Busch, the makers of Budweiser and other, beer type drinks. They have an earnings report dropping February 26th. Now, they are currently at $54.01 a share. Yahoo analysts estimate they can move up to $69.75 in the next 12 months. If they do, that'll be a 29.14% increase. Notice they've moved up pretty much 6 weeks. 1 week was sort of a doji. So I would say 5 weeks out of the 6. And they have a 1.61% dividend yield. We have Haemonetics Corp. They have an earnings report dropping on May 7th or later that week. Currently at $63.02. Yahoo analysts estimate they can move up to $96.80 in the next 12 months. If they do, that'll be a 53.60% increase. We have National Beverage Corp. They have an earnings report dropping on March 5th or later that week. This stock is currently at $40.68 a share. Yahoo analysts estimate it can move up to $46 in the next 12 months. If it does, that will only be a 13.07% increase. For that reason, it's going to be removed from the watch list after this week. We have Elf Beauty. They are at $74.92 a share. Yahoo analysts estimate they can move up to $95.24 in the next 12 months. If they do, that'll be a 27.12% increase. And they have an earnings report dropping on May 20th or later that week. We have Diageo. They pay a 3.75% dividend. Their earnings report have already dropped. They're currently at $110.52 a share. Yahoo analysts estimate they can move up to $126.71 in the next 12 months. If they do, that'll be a 14.64% increase. And Diageo, for that reason, is about to be removed from the watch list. They actually sell a lot of alcohols. If you're into alcohol, you probably buy some things from Diageo. We have Value Line. Value Line makes a pretty decent periodical talking about stocks and investments. They pay a 3.05% dividend and have an earnings report dropping on March 13th or later that week. They're currently at $39.55 a share. We have Novo Nordisk. They pay a 1.83% dividend yield, and they have an earnings report dropping on May 7th. They're currently at $88.08 a share. Yahoo analysts estimate they can move up to $110.70 in the next 12 months. If they do, that'll be a 25.68% increase. So that's it for this week's winning stocks, guys. I look forward to speaking to you in the next video. Have a great night.